Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about CONSUN Pharmaceutical Group Limited Annual Report. CONSUN Pharmaceutical Group Limited offers a diverse range of products and services in the pharmaceutical industry. At its core, the company specializes in researching, developing, manufacturing, and selling Chinese medicines and medical contrast medium products. The company operates through two segments, CONSUN Pharmaceutical and Yulin Pharmaceutical. Under these segments, it provides various types of medications for different health conditions. These include treatments for chronic kidney diseases, diabetic kidney disease, nervous system disorders, and skin diseases. The company also offers a range of products for gastroenterology, including medicines, tonics, and other related products. In addition to its pharmaceutical products, CONSUN Pharmaceutical Group Limited provides medical contrast medium products, which are used in diagnostic imaging procedures such as neuroradiology, angiography, and urography. The company's product portfolio also includes ultrasonic microbubble contrast agents, which aid in the visualization of internal organs during medical imaging. Furthermore, CONSUN Pharmaceutical Group Limited offers a range of traditional Chinese medicines, TCMS, that are used to treat various health conditions, including irregular menstruation, abdominal pain, and skin diseases. The company's products are designed to address specific health needs, from treating chronic kidney diseases to providing relief for common colds and headaches. Overall, CONSUN Pharmaceutical Group Limited is a comprehensive pharmaceutical company with a broad range of products and services that cater to various health needs in the People's Republic of China. CONSUN Pharmaceutical Group Limited market capitalization of $15 billion is significantly larger than the average industry peer of roughly $2 billion. This shows that CONSUN Pharmaceutical Group Limited holds a significant advantage in their industry. CONSUN Pharmaceutical Group Limited trades at a higher price-to-earnings ratio of 12 times and a higher price-to-book ratio of 3 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The balance sheet appears very conservative, with liabilities representing only 25% of total assets. While this indicates low financial risk, investors should examine the composition and quality of the company assets to determine whether they justify the current valuation. Average liabilities have increased consistently as the company expands. Importantly, both assets and shareholder equity have grown at least 20% faster than liabilities, indicating that the business is expanding substantially and generating value after covering its obligations. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The company have a dividend yield of 4.6%. The income statement shows that the company have been growing its revenue annually and the operating income have been increasing. This shows that the business model works and the business is expanding. The company comfortably covers its interest expenses through operating income and maintains a strong cash position relative to current liabilities. The primary drivers of revenue growth or decline can be identified through an analysis of various product categories. On the growth side, kidney medicines have seen a significant increase of 20-21% in revenue, while hepatobiliary medicines have experienced a substantial rise of 43-44%. Medical contrast medium has also shown a notable increase of around 11%, and dermatologic medicines have grown by 4.4%. Additionally, certain customers such as Customer A and Customer B have contributed to revenue growth. On the other hand, orthopedics medicines have seen a decline of around 6% in revenue, while gynecology and pediatrics medicines have experienced a decrease of 3.6%, although they have also shown some growth with the help of academic guidance and scientific marketing. The overall performance is influenced by various factors including product categories, customer relationships, and market trends. The company's financial performance has shown a significant improvement in recent years. A notable change is the increase in net income, which rose by 18.4% and 19%, as per the reports on pages 32 and 39 respectively. This upward trend indicates that the company is generating more revenue than before. The profit margins have also seen an improvement. The gross profit margin has increased by 2.4 percentage points from 75.6% to 78%. This suggests that the company is able to retain a larger portion of its revenue as profit, indicating better cost management and pricing strategies. Although the net profit margin is not explicitly stated in page 39, it can be inferred that it has also improved due to the increase in net income and gross profit. The company's debt level and interest expenses have undergone significant changes in recent years. In terms of debt level, the data reveals a mixed picture. On one hand, bank borrowings increased from RM billion, 420 million, 420,000 in 2024 to RM billion, 494 million, 190,000 in 2025, indicating an upward trend. However, loans and borrowings decreased by 21.1% during the same period. Furthermore, the overall debt level of the company actually decreased. Regarding interest expenses, there has been a substantial decrease. The interest expense dropped from RMB 24,888 in 2024 to RMB 4360 in 2025, representing an approximate decline of 82.5%. This significant reduction suggests that the company is paying less interest on its debts, which could be attributed to various factors such as lower borrowing costs or a decrease in debt levels. The performance of various segments and regions has been analyzed based on the extracted summaries. In terms of revenue growth, the CONSUN segment stood out as a top performer, with an increase from 2,967,235 RMB in 2024 to 3,417,355 RMB in 2025. This represents a significant jump of 450,120 RMB. On the other hand, the Yulin segment experienced a decline in revenue, dropping from 442,836 RMB in 2024 to 473,106 RMB in 2025. This decrease is attributed to a loss of 30,970 RMB. In terms of profit growth, CONSUN also performed well, with an increase from 2,242,922 RMB in 2024 to 2,669,680 RMB in 2025. However, the Yulin segment's profit decreased from 293,008 RMB in 2024 to 305,621 RMB in 2025. Among customers, Customer A demonstrated a notable increase in revenue, rising from RMB 817,775 in 2024 to RMB 924,271 in 2025. In contrast, Customer B's performance was relatively stable, with only a minor increase of RMB 1,213. Management is optimistic about the company's future, projecting an average sales growth rate of 6.2% over the next 5 years. This growth is expected to be driven by strong performance in key areas such as gynecology and pediatrics medicines, which have seen a 4% year-over-year increase in sales revenue. The company has identified several strategic priorities that will help drive this growth. These include building a comprehensive academic ecosystem, expanding into new markets and channels, and strengthening its brand influence through integrated marketing and partnerships. Additionally, management is focused on innovating growth models, improving workforce efficiency, and enhancing operational efficiency. Key drivers of the company's growth strategy include the normalization of medical insurance costs, the rollout of a diversified payment system, and the accelerated development of innovative drugs. The company is also prioritizing digital intelligent transformation to enhance operational efficiency and improve its ability to respond to changing market conditions. The company's financial performance has been marked by several key developments in recent years. One notable aspect is its dividend payout to equity shareholders. In 2025, the company paid out RMB 549,509, a significant increase from the previous year's payment of RMB 465,781. Furthermore, the proposed final dividend for 2025 stands at HKD 296,201, with an additional proposal to pay HKD 0.4 per share for the year ended December 31, 2025. In addition to its dividend payments, the company has also engaged in share buybacks. In 2025, it repurchased shares worth RMB 1568. Moreover, a more substantial share buyback was made through the stock exchange, with the company purchasing 100,000 shares at a total consideration of approximately HKD 1,551,000. These transactions demonstrate the company's commitment to returning value to its shareholders and managing its capital structure effectively. Concerns about inventory buildup or supply chain disruption have been raised in the recent analysis of company performance. On page 2, it is noted that distribution costs and cost of sales increased in 2025 compared to 2024, indicating potential inefficiencies in the supply chain. Furthermore, on page 10, reportable segment assets saw a significant increase of RMB 444,388, 7.6% increase, in 2025, suggesting an accumulation of inventory or other assets. Additionally, page 24 reveals that inventory levels for raw materials, work in progress, and finished goods increased in 2025 compared to 2024, which could indicate a buildup of inventory. However, on a more positive note, page 40 shows that there has been some improvement in the company's inventory management. The inventory balance decreased by RMB 18,272,000, 6.3% decrease, and inventory turnover days decreased by 28.8 days to 136.5 days, indicating a slight reduction in inventory levels and an improvement in efficiency. That concludes the financial summary for CONSUN Pharmaceutical Group Limited. Feel free to comment below, and I will be happy to answer them when possible.